the US markets. In fact, we do have the WPI data for the month of Feb, which we are expecting for our markets anytime soon. So it is estimated to soften on a month-on-month basis. The poll that I had done has indicated that maybe the WPI data for the month of Feb would come in at around 3.9%. This compares to around 4.7% on a month-on-month basis, with core inflation probably softening all the way to levels of around 2.08% versus around 2.8% on the month-on-month basis. Remember that in the month of Jan already, WPI data had already hit a 24-month low. So maybe there is expectations of further softening. But that's not what the CPI data had indicated, which came out last evening. So let's see what that eventually throws up. We do have Lata with us. We'll get to her in just a bit once we do have the WPI data. So 3.85% versus our poll of 3.9%, better than our poll of 3.9%. Lata, what are your first thoughts? This compares to 4.7% month on month.
No, I mean, it's obviously on the face of it very good. We're just getting the initial numbers, and primary articles index has gone down, which means perhaps food at the wholesale level has come down. We have to really wait and see. The internal details aren't there. But this would mean that at some point in time, we are going to get the WPI fall in prices transmitted to CPI. Manufactured products inflation has fallen to 1.94%. Food inflation has fallen to 2.76 versus 2.95 in January. Sooner or later, these should come down. I'm waiting for the cereals number. That's the one, that cereals and milk. That's the one that caused all the consternation, if you remember, in the CPI numbers. We have to wait and see. Overall food inflation has definitely fallen on a month on, I mean, these are year-on-year comparisons, but from Jan to Feb, the YOY number is lower. All commodities index also down. The food index is up 0.1% on the month. So my sense is the culprit is going to be milk yet again, and maybe even cereals. That would be a bit of a disquiet, but on the whole, the headline looks good. We have to wait for more details. Let's go over to, okay, primary articles index is down 0.6% on the month, but the food index is up 0.1%. That is a bit of a bother, but let's wait and see. Manufactured products index also up 0.2% on the month. So month on month, a bit of a worry that the fall has not continued. Let's invite the expert, Rupa Rege, the chief economist at L&T Financial Services, joins us. Rupa, the numbers coming in, wholesale price index at 3.85 compared to 4.73 in Jan. Good enough, you would think?
Yeah, this is exactly matching my projection. And
Okay.
but I am a bit confused because in yesterday's CPI print, you had mentioned in our discussions that fodder prices are rising. But actually here, if the non-food articles inflation has sequentially declined, because that primarily comprises of fodder prices. So
Okay.
I think we need to wait for, more data points to make any firm statement about the trends.
Okay. No, this was something which was told to me by Ramesh Chand, the Niti Aayog agricultural expert, and Ajay Veer Jakar. They're not obviously tracked on a day-on-day basis, but their fear was that milk products are likely to rise because of a fodder shortage on account of the heat wave. So probably they're also guessing that this might happen in the days to come. But do you see this trickling down? The wholesale primary articles index is fallen. Do you think, okay, cereals index is down 1% on the month. That's extremely positive. So do you think we can expect this impact on the CPI in March?
I think so, Lata. And from the first quarter also, the base effect will become very strong. So, and so far as the cereal prices are concerned, all these expectations that heat wave may lower the yield of wheat, etc., it is still not ascertained. But because as per the official reports, the temperatures have to stay very high for on a sustainable basis for that to happen.
Okay. Okay.
And
Well,
luckily,
now, yeah.
many in many states, especially the major wheat-growing states, they have taken, minor irrigation measures to control the damage. So on the
Okay.
whole, at this juncture, we cannot say conclusively about cereal prices also to increase disproportionately.
Oh, absolutely. Cereal prices, if anything, have come down at the wholesale level
Exactly,
month on
that's what
month,
we were
down
expecting.
by 0.95%. But milk is the one that's pulling it in the other direction. Milk prices
Yes.
up 1.5% month on month. That is February over January. And fruit prices are also higher. That's also contributing slightly, perhaps unexpected, because this is not a month where you see fruit prices rising, but this could also be a base effect. Rupa, in sum, what is the expected impact on CPI? You think that it goes fairly lower in March?
Certainly lower in March, but in the first quarter, noticeably lower because statistical base effect will also turn favorable.
Okay.
So
We have a,
we may move from 6% handle to say 5.5%.
okay. Okay, 5.5. So at least below the Reserve Bank's comfort
Yes.
zone of 4% plus or minus 2. Okay, in manufactured products, I think the upward thrust is coming from fabricated metal products. That one is up 1% year on year. Month on month. Basic metals, which rose even in Jan, have risen further. It's a further 1.24% rise in basic metals. Cement is up 0.9%. Actually, manufactured products are somewhat more inflationary. I mean, there have been price increases in several of them. So month on month, manufactured products are up 0.2%. That is perhaps the core inflation worry, but core on the whole has gone down. You think that that will impact the core inflation at the CPI front? Core has come at 2.4% compared to 2.8 in Jan, Rupa.
Actually, all the data points you read out just now, it is in conformity with what's happening on the ground because, see, globally also metal prices went up. So, that cost push effect is getting reflected in metal product prices. Then cement is going up, steel prices are going up because construction activity has picked up considerably in India. So that is all in line with expectations. But weakness of core, I think, is reflective of still not very strong private consumption demand. And we had seen that also in the third quarterly GDP statistics. If you look at constant prices, the private consumption spending, it is a tad higher than the pre-pandemic level. So,
Okay.
And that's
final
why
question
I feel that, only the cost push pressures are keeping manufactured prices high and not the demand pull pressures.
Okay. Well, a final question on core inflation itself. The Reserve Bank in its December policy clearly stated it wants to see the persistingly high core inflation to back off. Now, at the moment, you can see that in WPI, but yesterday in the core CPI number, it continued at 6.1. Are you seeing that come down anytime?
See, core CPI also is based on many administered price products, services, So it's not exact reflection of demand pull pressures.
Okay.
But yes, the way things are panning out, and as we discussed yesterday also, I feel that given the global headwinds and, these pressures of financial tightening, etc., our weaknesses in exports, etc., job situation, going forward, I feel growth is going to weaken and that itself will bring down the core inflation. But whether that will happen in March, I'm not so sure. But definitely in the first quarter of FY24, we may see that.
Okay, that will, of course, pull back the Reserve Bank's hand. That's what they want. Just finally, Rupa, yesterday you said that a 25 basis hike from the RBI in April is par for the course. Now, the global tumble or risk off is just not going away. And when there is a risk off, obviously growth takes a beating. Do you think that the global slowdown may make the Reserve Bank pause in April?
Well, that is my expectation in the sense that is my wish. But, RBI will have to see, will like to control inflation sustainably below 6%. So if I go by these tendencies, I feel, and if I factor in their narrative, then I feel that they will raise it by 25 bips in April before taking a pause.
Fair enough. Thank you very much, Rupa, for joining us. Okay, so it's all cool on the WPI front, coming in at 3.85. The direction clearly is lower, and hopefully the lower prices will pass on to the CPI in the months to come. Nothing in this number to disturb the sentiment we got yesterday, which was that CPI is still adamant. So the Reserve Bank will be in a dilemma whether to hike because inflation is above the given mandate of the monetary policy agreement, or whether they should think global growth will do the work for them.
Absolutely.
It will keep growth weak, and that will pull down prices. Right. We have to really, I don't think anyone is the wiser. We will have to wait.
Okay, Lata, thanks a lot for that, for covering the WPI data. The market, by the way, is still under quite a bit of pressure. Today, once again, the Adani Group stocks are taking a big knock. So Adani Enterprises is now down 8%. And Adani Ports, the rest of the Adani Group stocks also under a lot of pressure at the low point of trade. So we'll try and focus on that on the other side of the break. Don't go anywhere. But before that, here's a quick programming reminder. Today, CNBC TV18 will host what will be India's largest summit on gender parity in Delhi. Women leaders from all walks of life will come together to brainstorm and ensure we take decisive steps to bridge gender inequality. The event starts at 4:30 p.m. and we'll bring you live coverage